All right, good morning. Who's alive? Who's ready to go? Yeah, boy. All right. Good morning, everybody. Comment allez-vous? How are you? I'm fine, thank you. Welcome to Forex.Today, the YouTube community of more than 20,000 brothers and sisters. Pump up the volume, focused on Forex, the foreign exchange. But you know what? We love the stock market. We love the bond market. We love gold, oil, Bitcoin, silver, chromium. A big whoop whoop for chromium. Thank you for being here. Thank you for participating. Thank you for backing me up when I get heckled. I appreciate you. So with that being said, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. How about that? All right, okay, so that setting changed. I was just saying I apologize for dressing casually, but a big whoop whoop to the A10 Warthog. Yeah. So anyways, what are we going to do today? Gold, oil, Bitcoin, dollar, yen, stock market, whatever you want. Okay, whatever you want. Let me know how it can help. We had a crazy week last week. We have a Russian embargo, an embargo on Russian oil. We have an incredible out of this ballpark Fed. We have the ECB that raised by 50 basis points. Remember, the Fed only raised by 25. They raised 50 and then said they were going to do another 50 at the next meeting, which is like verbal intervention. They jacked up interest rates in Europe by 1%. Oh my God, like that's crazy. Bank of England, you know what they said? We don't know what's going on. Honestly, they went through all the charts. They're like, this is gobbledygook. This is good. This is bad. This is good. This is bad. This is good. We don't know what's going on. Fed only raised by 25 basis points. And the market, I still think, is misinterpreting the future. So we got to figure all that out. Holy smokes, what a tangled web that has been weaved. So luckily, we just show up every day and do our job. So, you know, there's always something. There's always something. So we got to work with chaos and find repeatable patterns and make consistent profits if possible. So that's what we do. So that's that. There's some geopolitical risk with Chinese spy balloons and stuff. Hey, whatever. Just another day. Huh? Right? What did Ice Cube say? It was a good day. Didn't even need my AK. Yeah, that's a decent day. So ask questions, get involved. Let me know how it can help. In the description below the video, there are a plethora, a cornucopia of resources to help you become a better trader. Many, many years ago, I wrote a book, Strategic and Tactical Forex Trading. Maybe reading is your modality. I got you, dog. Click the link, buy the book, make the publisher rich. Don't worry about me getting rich. I don't even know where the checks go anymore, actually. So the checks are pretty small. I don't make $1 million selling books. I had a check here once, but anyways, I make $5 a book, just so you know. Yeah, so I don't care if you buy the book or not, but if you do, would you please leave a review? Because the next book I write is going to be significantly cheaper, and I probably won't make any money on it. There you go. So if you can leave a review on this one, then when I launch Hawks and Doves, which is the title of my next book, you'll maybe that'll help. That'll help. I don't know, right? Have one with lots of reviews. Maybe that'll help Amazon say, you know what, you should buy this one too. Cool. Okay, so anyways, if you could do that, I appreciate it. Took me over a year to write the book, so if you could leave a review, it might only take you 5 minutes. That'd be great if you could do that. You should join FX Bootcamp. I run a community. There are videos, there are live groups. These are very helpful. They're not very expensive. I made them very affordable because I want them to be perceived as resources. Okay? Not a get-rich-quick thing for a guru. I don't know. I've been doing this longer than most gurus. So anyways, and then lastly, you need a broker. You need one that's trustworthy. Yes, you need fast execution speed. Yes, you need narrow spreads. Yes, you need huge swaps. All of that's actually quite rare in the foreign exchange world of brokers. So right off the bat, that's good. But they still need to earn your loyalty and respect. So maybe open up a demo account and see if Traders Way can earn your loyalty and respect. They earned mine, and I recommend them to you. All those links are in the description below. Please check all of them out. Huh? Okay. All right, so let me get the chat set up so I can see it a little bit better. Wayne, what's your view on energy prices mid and low term? 3 to 6 months, 1 to 3 years. Well, 3 to 6 months, plausibly bearish. Plausibly bearish and then bullish, actually. Long term, I'm very, very bullish on energy. Very, very bullish on metals. Very, very bullish on food. Yeah. So maybe you guys will back me up on this. One of the projects that I'm thinking of doing in the back of my mind is starting a fund focused on basic human needs. We'll invest into food, water, metals, energy. That's it. So what we'll do is we'll focus the allocation of capital towards things that are useful and not things like Facebook and Snapchat. I mean, really, if you think about some of the biggest challenges that we face right now in the next 5 to 10 years, it's because we have not been allocating capital towards things like energy. That's a simple one. Energy. Or we all want to get away from gasoline vehicles and diesel trucks, but instead drive electric vehicles. Great. Where's the copper coming from, son? Where's it coming from? The copper people don't know. We haven't been investing into these things. It's so complicated in the United States, even if we wanted to open a copper mine, it's not worth it because it's overregulated and taxed and I don't know, whatever, but whatever. I don't mean to get on that soapbox, but the thing is we're going to have massive shortages because we've been allocating our capital since maybe, year 2000 to develop things like Facebook and Snapchat. And that's where our money's been going. Hey, you invested into Peloton. Thanks a lot. Good job pumping up GameStop. Appreciate that. That's where the capital went. Thank you. But when you jump in your Tesla, that changes where capital needs to flow So I'd like to invest into that. Food, energy, clean water, metals. If you have to dig in the ground, that's what I want to invest in. So what do you think? Would you consider allocating resources to a fund like that? Well, Lucas says, yeah, that's the bigger question. Where does the electricity comes from? Also, along that line, Lucas, we built the electrical grid in the United States in the 1950s, and it has not been invested in. I mean, we do maintenance. If you recall the solo growth model, there's the initial outlay of capital, which is that increases productivity and shifts your steady state to the right, but depreciation comes along and you have to spend more and more of your new capital just maintaining your old resources. So here it is. We still have an electrical grid from the 1950s. Was it built to power your Tesla and your Ford Lightning? I'll get their favor. Okay. Burns says, hey, you listen to an English guy saying that Putin and Xi are looking to destroy the dollar as a reserve currency. Stop listening to that guy. I mean, it's very entertaining, probably makes a lot of good points. Not helpful. Putin and Xi are definitely talking, but, it sounds like, Penguin and the Riddler down in a cave working on how to destroy Batman. Whatever, dude. It's not going to help you be a professional trader. It's interesting and probably, like I said, you probably make some really good points. But we got so much reality to worry about. You don't need to add that to the game, And by the way, if you were a professional investor or trader and you went to a professional investor and you're like, hey, give me $1 million, and then you start talking like that, you're going to lose a lot of credibility very quickly. And just be careful. That's all I'm saying. Did you see the IMF lady on 60 Minutes last night? I don't have it. I don't know. No. Anyways, let's do around the world, huh? So, Burn, to answer your other question. Gee whiz. 20 dwarves. In sooth, I know not why I am so sad. All right, let me try this again. We'll do a quick around the world, but I want to make sure I answered Burn's question. Energy on the short run. Look, what's the price of Russian oil right now? Russian oil, $60. So in the short run, WTI and Brent are going to get closer and closer and closer to that number. Well, there you go. So in the short run, that's the number. Remember, oil follows the law of one price. Price. If you are a member of FX Bootcamp, remember I added the oil trading course. And in the oil trading course, we talk about the law of one price. Price. So an arbitrage presents itself where many buyers in the world will prefer to buy the lower price because oil is oil. India doesn't give two hoots whether it comes from Russia or anywhere else. So all they know is it's $60 a barrel. Boom, we'll take it. So there's less demand for the other oils, you see? So anyway, so that makes sense on the short run. Maybe summer driving season pushes up demand again for gasoline, which pushes up refineries' demand for crude oil. And so that could also happen. But long run, holy smokes. Yeah, we have a shortage of energy. Okay. Lucas says the grid is a real problem in rural areas. Yeah. Millions and billions of dollars of infrastructure. Yeah. Well, and some, Lucas, like even if we go all the way back to John Locke, he might say that would be a useful purpose of having taxation. But maybe it just doesn't make sense in some cases too. You got one guy way out there. Should we spend $30 million running power lines to him? You're like, no, screw you. All right, so you give him some solar panels and a battery, right? At least we have that technology. One of my thoughts here, now since I'm on a tangent, might as well go with it. We're going to find out that we just can't make enough batteries. Like our current plan, remember, our ESG plan is just switch from, old school energy sources like carbon. And we're going to go green. Boom, let's all go green. But there's no plan. There's no strategy. It's just go switch. We need to save the world at all costs. Well, that could lead to a global depression, which it would also solve pollution problems if we all don't have anything. But we need a better plan. And I think what will end up happening, just looking at things like you're going to need copper and cobalt and lithium and all that kind of stuff. And when you look at the number of cars in the world and the growth of the how do you say it? The driving industry. If you project that out 10, 20, 30 years, we just don't have enough. We just don't. We're not going to have enough. So it'd be interesting if we have about 10 years to go where we switch over 20 or 30 or 40 or 50 or 60% of our gasoline cars to battery cars. That's going to be cool. They're definitely better vehicles. And a battery vehicle is just a better design than the internal combustion engine. But here's the thing. Maybe around then, in 10 or 15 years, the battery will be 99% of the cost because we just won't have the lithium. We just won't have the copper. We just won't have the power grid. So we'll have to switch and say, okay, great. We can't use the battery as a power source because we can't make the batteries anymore, nor can we power them up when we plug our car at home. There's just not enough electricity and there's just not enough lithium and copper. So then we switch the cars over to hydrogen. And that'll take another leap in technology. But imagine instead of a battery at the bottom of your car, you have a little power plant. Now, the problem is it doesn't produce much power. That's the problem. So, anywho, I think we'll run into a problem and then we'll have to deal with that. Burn says solar and nuclear. Yeah, I'm okay with nuclear and solar. I could see a world where we have like Tesla roofs, or at least solar voltaic on our roofs and a battery for our house. I think we should tear down the grid. But then we might find that it's too intermittent for solar. So then we go back to the same thing that we're talking about, where next to your hot water heater, which mine is actually outside, my hot water heater can run forever. My house never runs out of hot water. And imagine, right, and my hot water heater is only, I don't know, it's commercial size, but I don't know, let's say it's half the size of my body. So it's tiny compared to a traditional hot water heater with a tank. So imagine next to that, I have a hydrogen fuel cell. And that's where my electricity comes from. I always have hot water. I always have electricity. And my vision is, there's no power lines running to your house. Now, actually, I don't have power lines over my neighborhood doesn't have power lines. They're ugly, so they're all buried. But imagine a world without power lines and transmission lines going all the way to a giant nuclear power plant. Why have a giant nuclear power plant when every house could just have a little power plant of its own? And, I think that makes sense too. And we get rid of the grid. But I wouldn't want to invest into like venture capital. I've already been a venture capitalist. I just want to allocate. I just want to steer resources to things that are useful. So how can I help Lucas increase the yield on his farmland by better use of resources or better use of technology? Is it, do we invest into old school stuff like producing fertilizer? Yeah. That would be it. Now, Lucas says, well, what about an industry that requires a huge amount of electricity? Do they have a huge generator sitting outside the factory? Well, they actually do for backup, diesel generators, right? But imagine this, Lucas. Back in 2000 and I don't know, 5 or something, I was in China, and I met with the governor of the Sichuan province and the mayor of Chengdu, and we looked at everything that they were building at the time, and they were building entire industries in an organized, thoughtful pattern. And so we visited a lot of the sites, and they're like, over here we're building a water treatment plant, and over here we're building this thing, and this is where all the large companies are going to go. Here's where all the small and medium-sized companies are going to go. Here's the railroad connecting to the airport, and all that kind of stuff. And here's where all this is going to be. And the living, the neighborhoods and such were planned and organized. It was really amazing, Lucas, right? So imagine a world where you had a modular nuclear power plant set up in an industrial area that powered, 1,000 factories. And so the industrial part of town was out near the airport, out near the railroad station, because they need to be interlinked so you can move this stuff around. And they all have a power plant over there. But the thing is, the United States could never do that because we're not centrally planned. But they could, and that gives them a strategic advantage in that case. What a great coffee. All right, now can we get on with it? All right, so we had a ripper strong NFP. Dollar got strong. Yen got weak, which is kind of interesting. Okay. Yen gets weak with risk on, which makes sense. But then the risk on scenario with non-farm payrolls suggests that there's a lot more work for the Fed to do. And so the good news is bad. Favor, I'll get there. Okay, I'll get there. So that's interesting. CAD up, risk on. Euro up, risk on. Yen down, risk on. And then Asia struggling. And the UK trying to rebound. But remember, the UK is in trouble and they don't know what to do about it. So that's like we had planned this before that, we're going to pick on pound early this year. 2023 is probably about beating down the pound. And so far, December was disastrous for the pound. then January was up, and now it looks like February is a resumption of the downtrend. Okay. Blue says, why would the good news be bad and make the Fed consider to do something different? No. It's not different than rate hikes. It would either raise interest rates higher. So right now, 5.1 is priced in based on the dot plot. And the FOMC meeting made the market interpret that means we may only go to 5%, but the top is likely 5.25. And then the Fed's going to be paused. Okay, Blue? And then if you go out to November, the market is priced in a rate cut. So one of the things that we've been talking a lot about in FX Bootcamp is watching whether 5.25 or will it go to 5.5. Okay, that change in sentiment, that one more rate increase means dollar strength. If the market decides like, oh my God, they're going to go to 5.5, not 5.25, that decision would bring dollar strength. The next thing that could also bring dollar strength, Blue, is that we don't get a cut at the end of the year. So that like maybe we only get to 5.25, which is neutral, Blue, because that's already priced in. But then we don't cut. The Fed pauses and interest rates are still 5.25 at the end of the year on December 31st. And there is no Fed cut, but a Fed cut is priced in. So over time, if the market says, oh my God, there's no rate cut coming at the end of the year because we still have a crazy labor market, well, then that's mispriced and they would have to buy some more dollars. Okay, Blue? So those are the two issues that are going down right now. The number of rate cuts before we hit the terminal rate, and then what happens at the end of the year. Is there a cut or is there not a cut? Okay? And so NFP came out and people are like, oh God, one of those things are likely. Either the Fed's going to go a little farther than priced or they're not going to cut at the end of the year because they can't cut at the end of the year because the market's still too red hot. Most likely, I do think it's only 5.25 without a rate cut. Because I think we're going to get to the end of 2023. So on December 31st, as you're lifting your champagne glass with your pretty person next to you, inflation will still be 4.5. And remember, the Fed is committed to 2. I don't even think it's possible for the Fed to be successful. Okay, if you want the Fed to go to 2, then they have to. Okay, then they have to destroy the economy. What I think would be great is the Fed gets to 5.25. We stay there for 5 years. Okay? Right, Meta, but I'm saying at least, right? But not rampant either, Meta. But 4.5, whatever. I'm just making up a number. It could be 4, it could be 5. But not 9 and not 2, right? So, within a reasonable range. I think the supply chain has taken care of itself. I don't even think it has anything to do with what the Fed did. I think the supply chain fixed itself as we've fixed COVID, right? So anyway, so we got all that down. The Fed normalizes interest rates, and if you have a bushy beard and a fat belly, you've never seen 5.25 interest rates. But for us gray-haired silverbacks, that's actually pretty good levels of interest rates. That's actually pretty normal. That's what it used to be when things were good. Okay, so I think we stay there for a while. I think we change governments right? I think maybe, and this is going to be hard to believe for everybody, but maybe Republicans come in and raise taxes. I mean, I don't know. I mean, it sounds silly, but are the Democrats going to raise interest rates? Well, they could be doing that now, but they're not. So maybe the other party does. I mean, I don't know, right? Gee whiz. But the only way out of this, in my humble opinion, is to raise taxes. I'm not a tax raising guy. I don't like high taxes because it now gets tricky. Who am I going to raise taxes on? Corporations? I don't like that. The energy industry, like, did you hear that Europe is going to charge 75% taxes on the energy companies? Gee, I wonder why Europe's in an energy crisis. Okay. Oh, so you don't want them to invest into producing energy. I mean, you want to take all their money so there's no money left to invest. I mean, it's so silly. Now you have an energy crisis. But whatever. So I don't want any of that to hear. So I'd have to tax the people. And my argument to the people is, hey, we gave you money when we had to shut down the entire economy. And we kept you fed and alive and your rent paid while we were all shut down with COVID. Great. Give it back. Okay? Give it back. So I'd tax the people. And not just the rich, I'd tax the poor too. If you took the money, you got to give it back. Okay? And then that's how we get out of it. So maybe something closer like that happens if, imagine, it's 5 years from now or 8 years from now or whatever. At some point we realize nothing that the Fed can do or has done totally fixes the problem. So some adult in power addresses the issue. Okay, so we'll see. How do you destroy economy? Raise tax? I would say no to that. That would slow it because you're removing money, like the Fed raising interest rates. It's similar. But the destruction of the economy would be not that the companies are less profitable, but they can't make money, right? So a recession is very, it's a vicious cycle where people lose jobs. So now they can't go to Supercuts and they can't go to Applebee's. And all of a sudden people at Supercuts and Applebee's start losing their money or losing their jobs. And then they buy less groceries or go on food stamps and we're down. And it can happen pretty quickly in an economy that's 70% itself. So, right, people stop spending money on, games on their phone. You're like, now that I've lost my job, I'm not going to spend $12 a month on my words with friends so I don't get advertisements, right? And all of a sudden you're just cutting back on everything and you're switching over from steak to chicken, and you're making all these economic choices based on the scarcity of money. And that's because, and remember, productivity is falling with all of that because nobody's working. So productivity falls. And then demand for certain things collapse. Now they lay people off and demand for other things go up. So suddenly nobody's buying filet mignon and the ranchers are going out of business. So you couldn't even get it if you want it. But then everyone's eating chicken because they can't afford steak. And now chicken prices go up because there's not enough chickens. And all of a sudden you very quickly turn into a third world country where nobody's got money, but prices are high. And that, to me, is a destroyed economy. Everybody's poor and all the prices are high. Okay? Cuba might be a great example. Hey, you can have as much food as you want as long as it's rice, beans, and fried bologna. You're like, no, I'm on an island. I want some lobster. Oh, we don't have seafood. They actually said that to me. My first meal there. I'm like, I want the lobster. Oh, we don't have lobster. Oh, I want the octopus. We don't have octopus. I'm like, wait, how long are we going to play this game? I'm like, dude, I'm in Cuba. We're 3 blocks from the beach. What seafood do you have? We don't have any seafood. No seafood. Why? I don't know. Nobody knows. Nobody knows about anything. Why don't you fix up that house? No, I don't know. So anyways, that Muhammad's like, it's messed up, but that's what happens when your economy collapses. The productivity is low because nobody has anything to do. Therefore, nobody has money because your productivity, you receive capital as compensation for your productivity, right? So if you're not being productive, then you don't have much capital. And if you don't have much capital, then you don't have much to spend, which means the expensive stuff you can't buy at all. It doesn't even exist. So all the cheap stuff is in 150% demand, which means now the prices are high. So now you get a little bit of fried bologna and you get lots of rice and beans. Okay. Forex Pivot says, I'll take Pepsi. No Pepsi. T. Is that the one also where they go in for breakfast? Right? What is it? It's Jim Belushi, Chevy Chase. So you're talking like season 1. And the other Ghostbuster guy, Dan Aykroyd. No fries, chips. I'll have the eggs Benedict. No eggs Benedict. What do you have? Burgers. 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 Wow, you're going season 1, dude. Holy smokes. All right. So anyways, look, capitalism is not perfect. There are lots of flaws. Cheeseburger. Sorry. Capitalism is flawed. It is not perfect. It is guaranteed to lead to inequality. Okay? But it's the best thing that we humans have figured out so far on how to run an economy. And there's a stark contrast. Again, I'll use my recent example at Cuba. There's nothing to do, but you're paid to do nothing. Literally, you're just paid to just stand there and literally do nothing. But you don't make much money, but you have a job. And no one is rich. People look at these beautiful houses, and I asked them, how come you don't fix up the houses? I don't have any money. My neighbor doesn't have any money. My uncles, my cousins, my aunts, my uncles, nobody has any money. We don't even think that way anymore. There's just no money. There's nothing. Even if we wanted to, we couldn't. And if we did, there wouldn't be a reason why. So there's just nothing. And so, therefore, there's no productivity, right? There's just nothing. Well, in the United States, it's much more capitalist compared to many countries, but especially Cuba. So you go around and look, do you want to get filthy, stinking rich? Yeah, you can listen to a guru on YouTube, get all excited about investing into real estate, go into a neighborhood that's got fixer-uppers, go to a bank, borrow some money, jump in there, fix it up, flip it, and make 50 grand. And now there's a horde of people going through every neighborhood in America looking for opportunities to fix up broken down houses with mostly bank money and then flip it for a profit. I mean, think of it, an army of people walking through America looking for broken down homes to fix up. And you get the exact opposite. But what does it mean? The people that actually can do it now are rewarded. people that don't do it don't get that reward. Now, sometimes it's personality. I'm an entrepreneur, so I can't help but think that way. I know lots of people in my life that are not entrepreneurs. They're risk averse. So they're like, they understand the concept, but they're like, I would never do that. Why? Well, I might lose money, right? So they just go to work, be productive there, get their money, and they're safe. Good. That's another reward. Safety is another reward. They do okay. And then there are those that are like, well, I see the opportunity, but I go to the bank to borrow the money, and I'm the wrong color, I'm the wrong religion, I'm the wrong sex, I'm the wrong whatever, and they don't give it to me. Now, capitalism is not supposed to work that way. In fact, capitalism does not work that way. So that's some degradation of capitalism. Because at capitalism, the banker says, you got good credit, and we see the opportunity you found, and we want to invest. We will lend you the money. It shouldn't care whom you make love to or the color of your eyeballs, right? Like a capitalist doesn't think that way. They want to invest in you because they're going to make money, honey. And they love you. Okay? So anyway, so capitalism is some people see capitalism as flawed because some people make a lot of money and some people make no money. But that's what capitalism is. You either take the risk and think of it, finding a broken down house, fixing it up and making it useful again, and then selling it back to society. It's productive. Now, I'm not going to get in an argument about gentrification and all that kind of stuff, but you could probably guess what my point of view is. But nonetheless, I think that's such a fascinating part of economics. It's really fascinating. And especially when you travel around the world and you see differences. You see differences, and to different degrees of differences. Canada is not the same as the United States. And Mexico is definitely different than Canada. But we're all neighbors. Mexico, Canada, the United States, they're not the same. And to different degrees, not the same. Canada is not the same as the United States. Remember, Canada wasn't in the 2008 financial crisis. It wasn't over-leveraged like America was. Why? Who was the finance minister of Canada at the time of the right before and during the financial crisis? Well, I guess right before the financial crisis. Mark Carney. So then we get hit by the global financial crisis. Who gets hired by the Bank of England to run the Bank of England? Mark Carney, the Canadian. The Canadian, eh? Running the Bank of England. Why would the Bank of England do that? Mark Carney ran Canada in such a way that they never entered into the global financial real estate collapse. Too prudent, too conservative. Canada's also got really cute girls. Their noses turn red in the winter and their cheeks turn all red in the winter. They're so pretty. Beautiful. All right, so now let's go around the world. Favorite wants to do Aussie yen. Anybody want to do Aussie yen? Now, Forex Pivot says provides employment if you use contractors and stuff. Yeah, I've had, I would guess during COVID, more than 100 different people at my house working. I would guess. Definitely more than 50. If not 100, probably more like 75. Different souls that I employed during COVID. Cool. That's right. Equality only works on the poor side of it. Yes. So when I was in, again, Cuba, my recent experience, so obviously it's going to come up in conversation. I didn't get a sense of like racism or racial inequality, right? So look at, I'm Canadian, I'm pale white. When I put my feet in my swimming pool, my feet look like they're made out of snow and ice. I'm as white as you can get. I have the same body as a hot water heater. And so you go to Cuba and there are people that could be my family, like literally my family. There's pale as me and they look like family. They look like my uncles and aunties. And then there are a little bit darker. And then there's very much darker, definitely African blood, and then definitely some Hispanic blood, definitely Spanish blood, and definitely white. And there doesn't seem to be any difference. In America, we don't quite mix that much. It's amazing. There's some level of segregation. There's not rules or laws and all that kind of stuff, but the United States is still somewhat fragmented. And I didn't see that in Cuba. But on the economic side of it, everybody was poor. I mean, not everybody. There were people that locals that clearly had some level of more money, a little bit more sophistication, and a little bit more money, but it wasn't race-based. I don't know what they did to get the money, and I don't know what rich in Cuba is. Is it going from, $400 a month to $4,000 a month, and that makes you rich? I don't know how rich is rich, but I think the dispersion or the disparity is much, much, much smaller. So everyone, generally speaking, is poor. Okay? For example, there's nothing to buy in Cuba. What are you going to buy in Cuba? You know how many people wear Louis Vuitton? Nobody. So you got to save money, which is not easy when you don't have any money. But you got to save money. It's $400 to buy a visa to Panama. Now, that's almost like 10 years. It'll take you 10 years to save that kind of money. And you go to Panama as a Cuban so you can buy nice stuff. If you want to buy a fashion dress, you got to go to Panama. Capitalist. And then you got to fly back to Cuba. And your clothes are not as fashionable if you're Cuban. So it's just like, so you got to pick and choose. Either everyone is the same and that leads to everyone is poor, or you give everybody opportunity. Cuba lacks opportunity. America has nothing but opportunity. See? So you got to pick and choose. And there are strengths and weaknesses, positives and negatives for all of them. All right, let's do the yen pairs. Okay, Favor's been very polite and patient, I should say. Let's look at here. Right now we have a little spinning top on the daily on the Aussie yen. Okay, but the plan that I did last night with the day trading group, where is it? Yeah, by the way, where does the president of Cuba live? Across the street from the Cohiba factory. Like, oh, there's his house right there, across the street. Beautiful neighborhood. But you know what? Not that beautiful. They're like, oh, it's the Beverly Hills of Havana. I'm like, yeah, it's not Beverly Hills, dude. Anyways, Presidente. Yeah. Burns says, isn't the U.S. boycott a big part of that? No. No, that's what everyone has been told. I don't think that's true. Yes, the United States is the biggest market in the world and is very, very close to Cuba. But we have British and we have Germans and we have the French and we have Spaniards and we have the whole entire rest of the world, the Russians, the Chinese. Anybody can go to Cuba and spend money and stay in beautiful hotels on the beach and go see all the touristy things. So to me, it seems like a big lame ass excuse. Oh, it's the embargo. 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 I'm like, dude, you got the entire rest of the world. You should be doing better than this. So so that's how I saw it burned. I'm like, it's not the embargo. And I don't know if it's even communism. I think it's socialism. If you look at China, it's communist. And they're filthy, stinking rich now compared to when they were socialists. Filthy, stinking rich compared to 30 years ago when they were socialists. Now they're capitalist, but still commies. Okay? So Cuba can stay communist if it wants. I'm not here to talk about their political system. I don't care if you're a communist or not. I'm not a communist. But the socialism, I think, is different. Now, remember, communism is a political infrastructure, if you will. It's a political decision on how you manage and allocate resources. Socialism has to do with how sort of society is organized. It's a social infrastructure. Okay? And I believe that's the part that's dangerous. Okay? So anyways, again, it's just a recent trip, so that's why I'm harping on it. But it's fascinating. It's fascinating. I've been to communist China. I've even stepped foot on Russian soil and tried to bribe my way through border guards. So, dude, I've been around and I've seen much of the world, and I've been in plenty of challenging places. Right. I'll never forget in South Africa where Ryan, he's like, hey, do you want to go see the slums? And I'm like, no, I want to see the rich neighborhood. I mean, I've been in Brazilian slums, Indian slums. I'm like, I don't need to see South African slums. I want to go to the rich, fancy places. Huh? So I've been around, man. I've been around, seen a lot of things. Cuba is fascinating. It's fascinating. Because it's a time capsule. Literally on one day, everything changed and froze in time. And it's just, oh my God. Yeah. Cool. So anyway, okay. Now going, so we were talking about, for Favor wanted to know Aussie yen. If you are playing, okay. There are so many young people that embrace socialism, blows your mind away. Well, it sounds good. The thing is, it makes sense in a pamphlet. So read Karl Marx's pamphlets like Das Kapital, and there's a couple of others, beautifully written pamphlets, and it's very compelling. It's a very good story. Okay, money for nothing and your chicks for free. That kind of thing, right? Like, it just seems good. Why do you have to work in a horrible factory that destroys your human soul when you could just be a microbrewer or a poet and a painter and be connected to nature? Okay, cool. But somebody's got to dig the hole in the ground and suck out the oil to give you electricity, right? So like, it's a great story, and it's appealing to the young and to the poor. But it's a mirage, and I don't even have to debate it because we've spent hundreds of years, right? A few hundred years, 200 years for sure, but you can go all the way back to, the beginning of capitalism, which I would say would be Genoa and Venice. And so anyways, we've tested these economic theories and then go into the 1800s and then again through the 1900s and to where we are today. We've tested and vetted all of this over hundreds of years. So you can go back through history, or you can just look around the world. Who lives the most comfortable? And who lives with the least amount of comfort? And then look at how do they organize their capital, right? Their economy. How do they organize their economy? And how do they organize their society? These are just human decisions. And you'll find that some have worked consistently. Think of China, think of Taiwan, think of Japan, think of South Korea, think about Vietnam, okay? Right? And contrast and compare, Holland is different from Denmark, which is different from France, which is different from Spain, which is different from Germany, which is different from Canada, and compare and contrast them. And then you could look at the United States and you start looking at all these different decisions. Like, why does Germany have consistently lower unemployment than Spain? There's a social and economic decision that made those things. They're not right and they're not wrong, but these were human decisions. And you got to find where you think you want to be. And Germany and Spain are radically different from the United States, And the UK and Canada are much closer, but they're much different than France, okay? So you start looking at all these things, and what's the common thread? Different forms of capitalism, different forms of democracy. And I don't think democracy is the thing that's the winner. China's not a democracy, and it's kicking butt, but only when it turned capitalist. So it's very interesting. And made us right. Humans are not ready to give up hope and a better way of life. And that's what I saw in Cuba. But it's hard after you've gone generations. It's hard. It gets harder and harder kind of to see the light. Because you just don't, you don't know how to think like a capitalist as much as a capitalist doesn't know how to think like a socialist, right? I look at something and I very clearly see my point of view, and they just as clearly see their point of view, and we're both right from our points of view. And so it gets harder and harder and harder over time because you just don't know how to do it. Okay. But everyone wants, at least to some degree, a little better if they can. All right, so let me get back to this for the 50th time. Sorry, everybody. What do you think of NFP? Okay, your decision there gets you this way, or if you have the opposite opinion, you get that way. Okay. Is NFP risk on or risk off? That's it. Meta says it's sad for those people that live in that time capsule. I don't know. I think a lot of people seemed like they were just in the Matrix. It must be weird to see tourists, though. You're like, I mean, it must be weird. But if you just don't know any different, I don't know. I don't know how you'd feel about it. It's just, some people just, I don't know. It's just Matrix stuff. You're like, huh, it just is. Yeah, you do know, I know. But it's fascinating. But you got to be careful. It wasn't my role to go in there and say, what the hell you guys doing? You should leave. You should do something different. Like that wasn't my role. It was more observe and just watch people. It's interesting. So if you're risk off, that's Richard. That's how you see it. Okay. Now remember, there's multiple risks on and risk off. Risk, you might say, well, good NFP is risk off because it'll make the Fed raise interest rates more and pull the stock market down. But it also means that there might be more demand for oil than previously thought. There might be more demand for commodities like copper than we thought. There might be more of something, more of everything, because the economy is still doing great, but then other things are going to be hit hard by higher interest rates. So some things might be risk on, some things might be risk off. So anyway, so you got to make your decision. And as I'm pointing out, it can be complicated, but make one or not, right? No one is expecting 517,000. Can we trust that number? Of course you can. It's the number. That's the number. Now, what are the odds, Richard, that there'll be a revision announced in the upcoming non-farm payrolls? I would say pretty high. Okay, but it's just a number. This idea of trust and not trust, and that the government's lying and the Fed is lying and everybody's a bunch of liars, dude, that's just not helpful. If you're a theorist like that, I don't think you're going to make a good investor. So there's just the number. And is there going to be a revision? Yeah, because it's complicated. Getting these numbers is complicated. So, right? So we know November, there was a non-farm payrolls number, but it was revised up. Then we had a December number. And since there's been another 30 days, we got better math. We have a better data set. And that was revised up. And then we just got January and it was 512, right? Or 517, whatever. Can we trust that number? Well, they have a small data sample and they used mathematics, and that's the number that popped up. Well, remember, it's a small data sample. After another 30 days of collecting more data, they'll have a better data sample. Could it be revised up? Yeah. But it's such a big number, it's probably going to get closer to a mean. So how does that happen? Let's go to a blank. Okay. And so let's say there's a chart here. And we have time over here, and we have NFP here. And let's just say over time. Sorry, let me try to actually get this right. Oops, didn't mean to do that. So let's redo it. Okay. So let's say NFP has been doing like this, and then we have an outlier. Okay, so in your statistical analysis, you're going to try to get an average of all of these. Okay, you're going to get a standard deviation from these. And then you're going to get and then we have this current outlier. What are the odds that with the bigger data sample, we find out that this outlier should be closer to the rest of the sample? Pretty high. Yeah, pretty high. Okay. Okay. So yeah, that's most likely. And really what we need to be trading, and this is what I've been pushing all of these years, is that we're trading the trend. NFP is still showing positive job growth, and the Fed is trying to lower inflation created by high wages, so they need to lower wages. The only way to lower wages is to have people lose their jobs. And right now, that ain't happening. And that's really what matters. We're looking at this, and in particular, if I do another color here, I'll do, instead of pink, I'll do sort of a brighter red. Let me remove these green arrows here. Okay, and I'll remove that. Then we go in this slightly different color. We go back with bigger data sets and do the revision, and we might find the revisions are usually a little bit higher. Now this is way too high, so maybe the revision is a little bit more like this. And then we adjust our mean from here to here, and the standard deviation here to here. And what you see is we have a different slope. Rise over run, right? Rise over run. And it still shows NFP has been way, like, again, an outlier. But as we get better and better data, what it is showing is we still have a positive slope, and the revisions are even slightly more positive than the headline slope, which means the Fed is not driving down wages because they haven't driven down jobs. Jobs are still very, very, very positive. And that goes back to the disconnect, right? So when we look at, you look at inflation, and Jay Powell talked about this in his press conference. He said goods inflation came down, but not wage inflation. And so if you look at the factors of production, things that go into an economy, you have capital and you have labor. Okay? And I believe capital is with a K because of Karl Marx, but whatever. Capital with a K. And so you can say, well, goods inflation is down and labor inflation is growing at well over 5.6% a year. So only half of the equation is falling, and the other half is actually still rising. Okay? And really, okay, the only way to get that down is labor has to suffer. Capital is already fallen. Gasoline and oil prices are down 50%. Copper's down 50%. Lumber's down 50%. Grains, and iron ore, and coal. If you look at the Baltic Dry Index like we did the other day, it's crazy low. So capital is way down. And labor is still up. And that's all that matters. This is what we're measuring with non-farm payrolls. And at one point, though, you know, if the trend looked like this and NFP, like I showed you, rise over run is positive, at some point for wage inflation to come down, you're probably going to have to see negative non-farm payroll number, minus 100,000. Well, we're a long ways from that, right? And that's how you should look at some of these numbers. So for this one, let's go back here. If you're a bear, this is pretty easy. Let me do it this way. If you're a bear, this is your sell zone. Okay, and if you're a bull, well, you had your buy zone right in here. Very, very basic day trading. Filtered through your bias. But look, this green box is today's buy zone, and today's target is up in here. Okay? You see that? Now, if you're a bear, you should already know this. Tomorrow's sell zone is right here. Right? You guys know that? You see? You should know this. If that's your sell zone, then bears, your trade plan for today is probably this. Which one's right? I don't know. I'll tell you tomorrow. Matrix is, yeah, probably because of overhiring due to cheap money. Yes, I totally agree. So Matrix, there's two ways of solving this problem. The economy goes into recession and we lose $5 trillion in asset prices, which means, let's say the stock market drops another 50%. So we go all the way down to 2,000, maybe 2,500 on the S&P 500. And the value of your house drops very significantly. Value of real estate in general drops very significantly. Rents drop very significantly because that's why commercial real estate property values would fall, because rents would fall, which means lots of people would lose their jobs. And then once we destroy $5 trillion of assets, hopefully we have a government and a central bank that can stabilize the economy and allow it to grow at 2.2% every year. But we have to destroy the $5 trillion. Now that is horrible. It would be painful. It would probably be very quick as well. Like all of a sudden, everybody's losing their job. Nobody goes to a fancy restaurant to buy filet mignon, right? Nobody, just nobody's got money. Everything just collapses. That's one way of doing it. I'm saying that's the coward's way of doing it. If we had an adult in the room, they would explain this to society and say, we can do it in an uncontrolled, painful, chaotic, scary way and destroy 5 trillion randomly, but we don't know if we can control that. Or we can raise taxes and pay down our debt over the next 5 to 10 years. It's our generation's moonshot. We will raise taxes and pay down our debt. Instead of sending someone to the moon, instead of building something better than Snapchat and Instagram and Facebook, we're going to invest into paying down our debt. Okay? That kind of stuff. And we will not lower, let's say, we're not going to lower prices by destruction. We're going to lower prices through reinvestment, so to speak. So here's the analogy. Okay? Yeah, space elevator will have to wait. Here's the analogy. Anybody that owns their home can simply look at a financial calculator and see the difference between paying down your mortgage in 30 years versus 15 years. And the difference is dramatic, especially if you're paying high interest rates like now. So one thing I might argue is if you've been forced to buy a house now with 6% mortgage or 5 3/4 mortgage, well, first of all, I told you a year and a half ago, if you're going to buy, you need to buy now. I said, leverage up with this money because you'll never see cheap money like this again in your lifetime. I hope you guys remember that. Now that's all gone. Okay. I made that play. Whoop, whoop, whoop. Got lots of cheap money. Cool. So now what? Now let's say you want to invest into an asset like a home instead of paying rent. That's smart. But you got to have a 6% mortgage. That sucks, but it is what it is. Usually what happens is you just get a smaller place because you're like, I can only afford $5,000 a month for a mortgage. All right, that used to give you $1 million house. Now it only gets you an $800,000 or $750,000 house. Well, too bad for you. So now you got that house. Now here's the next thing that you should probably do in the calculation. You should consider a 15-year mortgage instead of a 30. And you do the calculation and you'll save about 40%. Because if you buy a $750,000 house at 6% a year, by the time you pay it off, it'll be $1.8 million. Oh, yeah. Oh, God. Yeah. So anyway, so you pay it down twice as fast, but it's significantly less money. And right? That's how you get to, right? That's the kind of the process that I think everybody should be thinking in this type of economy. And that's what the government should be saying. Where we have this debt, but we need to pay it down. Well, what's the consequence? Well, imagine now, guys, you have to plan for a mortgage that you're paying down in 15 years. So now you can't afford a $750,000 house. So now what you do is you drop all the way down to a $500,000 house, but you pay it off in 15 years, and your mortgage was going to be $3,000, but you're going to be paying it down $5,000 a month. And you see, but now you don't have you've spent this money. Now you can't allocate it to other places. So you've removed money from your personal economy. And your debt to income ratio's too high to get a credit card, but the thing is that's the wealthy decision. You will pay down that mortgage much faster, and you will pay less on the long run, hundreds of thousands less. But in those 15 years, you won't be able to spend as much. And therefore, you can see if we did this for society, therefore, if people are spending less because you're spending more on paying down your debt, then demand falls and prices fall. And think of this, at the end of the period, guys, you have less debt and you've invested into assets. You have more assets, less debt, and you have strong productivity because your house is now working for you, providing you with a place to live. That's why it's owner equivalent rent. It's not just renting apartments. It's like your house is providing you shelter and they count that like rent. Okay. So what happens is prices fall, but you have a stronger balance sheet. You only have assets and you couldn't afford to spend money because you invested all your money. You see? That's what the government should be doing. Inflation will fall if demand for consumption falls. And why would demand for consumption falls? Because we're investing our money in paying down debt. We don't owe someone money for building an airport. We don't owe somebody money for building railroads. We don't owe somebody money for digging a new seaport. We don't owe somebody money for building a bridge. We don't owe somebody money for stabilizing our economy during COVID. We don't owe people money. The biggest thing is COVID didn't have an asset attached to it. And that's why we have inflation. If everybody in America spent most of their money investing into houses and machinery and farmland and investing into stocks that actually have income and profit, right? Like if you invested your money into income or asset appreciating assets and not consumption, we would not have inflation. Inflation's impossible. Okay? Inflation is only possible if you have too much money because you didn't own it, right? Like the government gave away free money, inflation. There's no asset tied to it. It shouldn't be here. It's abnormal. This is nature rejecting fake money. Nature rejects this. It's like getting your body rejecting a kidney on a transplant. It's just like, we don't want this. This isn't natural, right? It just rejects it. Nature's rejecting the government money that was printed and given away during COVID. So we have to get rid of it. The other way to do it is no productivity. Nobody's working. There's nothing. You can't buy anything because nobody made anything. You can't get someone to help you paint your house. Why? Right? Nobody owns a ladder. You can't buy any paint. There's no money to pay the worker. Nothing gets done. So the cost of painting a house is extraordinary. Where are you going to get the paint from? Who owns the power washer to wash the house down first? Oh, I don't own a power washer. Do you go to the store to buy a power washer? Where do you get a power washer? Oh, we don't have Home Depots. We don't have Lowe's. So where do you get a power washer? Oh, barter and trade. Oh, well, Jose over in the other neighborhood, he's got a power washer. You can't go buy one. There isn't like the Uber for power washers. You pop it up on your app and you'll just, I can hire a power washer. No, so it's all barter and trade, very inefficient. And therefore, what happens when you have inefficiency and scarcity? Prices are high. So We want to maintain productivity at all cost to drive down prices. We're very productive, but prices are high. So where did the inflation come from if the United States is very productive still, but prices are still high? There's too much money. It's just a simple equation. Simple equation. And the government can fix it today. Okay? So if productivity is high, I might argue this way. Okay? You might want to look at it this way. Y is GDP. I think nominal GDP. Y and I. Okay? I'd almost look at this as two different investment opportunities. Is GDP growing? That might be like sell yen, sell dollar. Or is inflation rising? That might be buy yen, buy dollar. So if we're hiring jobs still, like if we're still hiring 500,000 or 400,000 or 300,000 or 200,000, I don't care if it's 200,000 or 500,000. If we're adding jobs, companies are trying to be more productive. And that pushes up investment opportunity. And in particular, if I is falling, that's the perfect storm. Because if you had just let the market be, find equilibrium, productivity will always be up and inflation will always be down, because inflation will be down because productivity is high, and because productivity is high, inflation is low, and because of inflation low, productivity is high. This is a virtuous circle. So now we got to look at in levels of inflation and levels of productivity. And ideally they're like this, but our crosswind right now is inflation is persistent, yet the economy is still rising. So my advice to you today is watch the stock market, watch VIX. VIX above 20, indicates that we have higher levels of volatility and complexity. Okay. Matrix says, I don't think it's about more productivity. Well, in America, you hire someone so that they can be productive and help you make more money. Okay. Companies don't do it for altruistic reasons. So a capitalist will only do it. See, now you're talking microeconomics. Okay. And that's also a fascinating study. So anyways, you'd only do it to be productive. Other economies are different, but I'm telling you what a capitalist would do. A socialist would say, we're going to make sure everybody has a job, but nobody makes any money. So it is altruistic. So, okay, I'm going to pay you $40 a month, but you might have to just sit on a chair. What do? I sit on a chair. I've seen it. So not productive, but you're getting something. You're doing something. You're sitting there. You work at a hotel with no hotel guests. So you're serving nobody, but you're a professional server. And because you're not very productive. You don't generate much income. Therefore, they can't pay you very much. So you don't do much. You don't earn much, but there you go. So anyways, watch the stock market today. Watch the VIX. I think that's going to be interesting. And separate dollar and yen. Okay, we worked on this last night in the day trading group. This is important. If you want that type of advice sooner or in more detail or more consistently, you should consider joining FX Bootcamp. We went through all these pairs yesterday. So right now it's trying to set these through, but take this train of thought through all the pairs and find out, again, if you're a bull, there's a clear trade plan. You should know how to swing trade. Okay. If you're a swing trader to the downside, you're thinking this. If you're a swing trader to the upside, you're thinking this or this. And you should already know your targets. You should already know your entries. You should already know your exits. And the rest is your decision on bias. So to me, it's been explained a million times. There are lots of resources. There's 88 hours of training videos. There's a swing trading group and a day trading group. You just need to join. And this will not become trivial, but it'll be clear. The rest is about entry and risk management, which you'll be working on for the next few years. But if you don't know how to make a decision on what's going on here, then that's your terrible, terrible, vicious cycle. Okay? Now, Richard says, but without jobs, how do we get growth? You don't. Okay? If you've lost your job and you're sitting in your pajamas at 2 o'clock in the afternoon playing Call of Duty on your PlayStation 5, you're not being very productive. And the company will not grow because you're not contributing to society. Okay? So I'll see you tomorrow. Everybody in the day trading group, I'll see you at 4 p.m. We'll flesh out what happened today and add that to our analysis last night. Hopefully we have the clarity that we sought. There's some very interesting clues going on right now. So we can't wait to see a little more water under the bridge. So I'll see you at 4 p.m. For everybody else, I've already set up tomorrow's live stream here on YouTube. You can go ahead and click the reminder button. Thank you. I enjoyed our somewhat esoteric but interesting conversation today. And, tomorrow we'll do some more technical analysis. But right now we're sort of caught in a trap. And we'll see who wins this, bulls or bears. So without further ado, let me say peace on earth. May the pips be with you. And may your profits be above average. Cheers. Pachow! That just happened. Pow!